Welcome to the Broken Pie Chart Podcast, episode 346. I'm your host, Eric Moore. With me back on the program is Shane Skinner. Shane, what's going on today?
It feels like it's been a while. It's been a couple of weeks, I think. So it's good to be back. Very, very busy day today. A lot going on and just a really interesting time in the market. So lots to dig into.
Yeah, lots. So we're recording this Friday afternoon. Market had its first real down day in a while. In fact, Warren Pies put some data out. I think he said current streak without a pullback, one of the longest and strongest ever. And this was S&P 500 episodes with greater than 3% pullback, greater than current length 119 days. So I think the point here was it's like the market's only been going one direction. We've had, a little bit of a pullback. We weren't 3% today, but for all the look, everyone's been saying the market's too high. It's going to go down. It's going to go down. It hasn't gone down. Thursday, was it Thursday? I think that was the first day that both gold and the S&P was down on the same day. Today, the S&P was down, gold was up, bonds are up. But yeah, this is normal. We'll see if there's any follow through. I think the close was weak today, and you pointed that out, Shane.
Yeah, we slid. Futures even slid into the close, the last hour of trading after the market. For those that don't know about futures, right? Typically the normal day of trading and equities and everything, right, closes at 3 o'clock Central Time, 4 o'clock Eastern. But then, on Fridays, the futures will trade for, an extra hour. And yeah, we just sort of slid straight down that hour. So NASDAQ closed down almost 4.5% on the futures. So it seemed like it was pricing in President Trump mentioning something, after closing of futures was when that was slated. And then mentioning sort of the tariff thing earlier in today, maybe that's what it was. But, we're also at all-time highs. So it doesn't seem like that drastic of a move relative to how much we've been moving up lately. Like you said with this graph earlier, just the rate at which we have climbed here in the short amount of time we have, it's pretty incredible. Kind of a one-time thing. Haven't seen it before at this level.
Well, I'm trying to think. I probably have seen it before. Maybe I haven't. I guess we're up about 35%, or we were at the high off the April low. The Qs, so the QQQ, they were down what? Is this right? 3.5, or is this giving me some after hour stuff too? You're saying the NQ, the NASDAQ 100, the futures were down. Did you say 4 over 4?
4.35% down 1,101 and a quarter points.
Yeah, so they were down. SPX today was down, 2.71? Is that right? Yeah. 2.71.
182 and a half roughly. 65.52 and a half on the close, essentially. That's, yeah. We were just at 67.64 and a half yesterday. So, it's a sizable move, right? But at the same time, when you look at, again, just basic technical analysis, we're still within the 2 standard deviation below the 20-day moving average, right? We touched, I think, the 50-day moving average, the simple moving average on the futures on the S&P and the NASDAQ. So we're definitely at a level, worth maybe paying attention to from a technical perspective. But, as we know, that's only half the story, right? More buyers than sellers, more sellers than buyers today.
Well, we saw volatility move higher, although, look, VIX was up 5.23 to 2166. I would say it wasn't a real surge. It wasn't like it went to 40, and it shouldn't have. Today was not. I know we were down quite more than we've been. We haven't really had a one-day thing like this in a while. But it's not like volatility went crazy. It was kind of in line with what I expected. This morning I was meeting with some of the team in Arizona, and somebody asked me what the VIX was, and I said, well, it's probably like 22, and so I was pretty close. I didn't think it should be that high. You also have the Friday afternoon thing, and the reason why this matters is on Friday afternoons, people are like, well, do I really want to be long into the weekend? Sometimes they take some stuff off going into the weekend. There was news after the close, though, Shane, right?
There was, and I mean, it seemed like, earlier today, Donald Trump tweeted, or I think Truth Social posted that he was considering 100% tariffs on China. He canceled the meeting to meet with them as well. And, and then he turns around and he announces again after futures had closed and the market was essentially done for the week. He makes this announcement, 100% tariffs on importing goods, and they're going to tighten down on, technology and software exports. They're going to kind of get more strict on those, it sounds like. So it's a situation where he said November, it's October 10th. Okay, so we've got a little over about 3 weeks, right? Between then and now. And like you said, I mean, VIX jumped to 2166 on the close. And the last time VIX was this high was August 1st. So, it's been a while since we had a little spike in vol. And, it'll be interesting to see. Like, is this going to be a slow, steady churn up in vol, like a March, April thing? Or, vol sellers going to come back in, sell it back down, and maybe we stay range bound for a little bit and then move higher towards 7,000. I don't know.
I wonder if a friend of the program, I don't have permission to use his name, otherwise I would, but a friend of the program sent me a note today. He reminded me that November 5th is when SCOTUS, that's the Supreme Court of the United States, they're going to hear the tariff case. And they're going to hear the tariff case under the Emergency Economic Powers Act, or IEEPA. And I think a lower court ruled them unlawful. And there's a little bit of question of, well, if the Supreme Court says they can't put these tariffs on based upon that act, does it invalidate them? Does it mean the U.S. has to give refunds? How that would even work, I don't even know. So the announcement that it's coming on November 1st, November 5th is going to be a Supreme Court hearing. I don't know how fast they'll rule, but the person who sent me the note said, it's basically an enumerated powers argument. So if any of you are legal scholars, you'll know what that is, or constitutional scholars. So there's a little bit of ambiguity in here, and my guess is as we get closer to that hearing, you're going to see some volatility, or at least a reflection of the expectations on what's going to happen come into the options market. It's just a theory. I don't know if it's correct or not. And it doesn't mean the market's going to go up or down. There's some that believe if those tariffs get invalidated, that the market's going to rocket. Other people take the opposite side and say, no, this unwinding is going to be really challenging. And it's also going to cause companies to reverse making plans to do more manufacturing in the US. And it also creates an unlevel playing field where other countries can do whatever they want with tariffs. But now, absent Congress agreeing on something, and the last time they agreed on something was who knows. So there's a little bit of unknown here. So we'll see. We'll see what happens. Shane, we've talked about market dynamics too. And so today you have this outside day, you have vol go up, and you also have a large move like that. And it got me thinking, I mean, some of the selling that we saw and when it accelerated, I would say, and I'll get your opinion on this, as vol goes up, markets move, and let's say put deltas go higher and it depends on where the positioning is. There are these different levels. It's possible market makers had to short stock to further hedge. It's sort of a self-fulfilling prophecy there. I wonder how much of that was in play here today, Shane.
Look, I got to attend a lovely conference thanks to Zega and CBOE for putting on an incredible quantitative risk management conference in Chicago this past week. And, you have averages of options volume on 0 DTE SPX options that are making up on an average day 50 plus, 60 plus percent of that day's volume, typically, when you look at the distribution of how much over time. And it's, anybody who understands the concept of like the feedback loop that can get created on short term trading if everybody starts buying short term hedges, because maybe people are not necessarily concerned about this long term, but maybe it's more so, again, this Friday, they just weren't, people were worried. And what provides a short, quick, short term hedge going into the weekend? 0 DT SPX options, right? And so I'm with you. If enough of the volume and open interest on the book accumulated to being puts, then a feedback loop was probably created, thus causing market makers to have to short into expanding volatility. And obviously that just sounds, in other words, in English, that's pouring fuel on the fire, right? I mean, it's just, you have everybody taking on bearish positions and everything's full tilt one way. And so if things stabilize and the market catches a bid, people start coming in willing to take the other side, especially in shorter dated stuff. That's why we see this crazy reflexiveness in the market as well at times. Sure, sell-off could continue here and things could get uglier next week and maybe even into November, as you suggested. But when we see these V-shaped recoveries, that's typically vol gets bid up really quick, really fast, really high. And then, like we said, Vana comes in, vol gets crushed, deltas shift like crazy, and then the market makers end up buying all those shorts back up and taking the market higher.
I'm going to take another view on this too, and it's we've gone up pretty consistently for a long time. We were at all-time highs. It's natural to have a pullback. And by the way, this is why we hedge. That's why one of the core things we do is run hedged equity strategies, run buffered strategies. But you look at this and you say, okay, well, the market was at all-time highs. It's not the worst thing in the world to pull back a little bit and shake out some of the weak hands. So we'll see. We'll see what happens on this. I feel like there's so much bearishness at all-time highs. And people are like, I've never seen this much bearishness at all-time highs. I have. I've seen this before. We saw it in the 90s. We definitely saw it in the 90s where, you wait for the next shoe to drop. Sometimes the shoe drops, sometimes it doesn't. I feel like there's still a lot of people on the sidelines, though, that there's no way the market could be this high.
Well, absolutely. I think you nailed that. There still is. And what's going to happen? You witnessed this, right? You lived through this in the 90s. What's going to happen if this catches itself? Maybe it falls a couple more percentage points, but it catches itself, and then in a month and a half, if we're back to all-time highs again, at what point do those people that are on the sideline start chasing or I don't want to necessarily say chasing, but start deploying capital?
I mean, here's the other thing too. We're making broad statements, and when you watch CNBC and they'll talk about, I like the market now, I don't like the market. Like, it's so individualized. If you have somebody who has 15 years to retirement, 20 years to whatever it is, Like, who cares about a day like today? This will be a blip on a map at some point. 2022 is a bear market. And if you look at a long term chart, that eventually would be a blip. 87 is a blip. So these things are, I don't want to see people say, oh, now I should get out, I should go to cash, or now I should go in. I mean, these aren't decisions that you want to make here, in the present moment. But the other thing we got to talk about, though, Shane, is gold and oil. And I saw an interesting chart today that, let me grab this again. So XY scatter plot, I love these. And it's the combo of the oil price year over year percent gain, and that's the y-axis. The x-axis is gold price year over year gain. Gold is up. I don't know when this was done. This is B of A research, by the way, Bank of America. I mean, it's somewhere between 60 and 80%. I should have looked at this. I have that screen closed down, but it's almost 80% year over year gold. But oil is down, I think it's close to 20%. And this is an outlier. So this is all the way to the bottom right. And the other outliers where let's see. No, this is really the outlier, because 73.74, both gold
And 79
and
all the way out
oil,
to the right. Look
and
all the way out.
79, gold
Yep.
and oil were all up. But this year, gold is up similar to 74, but oil is not up, which is interesting. I don't know what to do with this, but it's the combo of big gold gain and big oil loss is a historical anomaly, quote, end quote, from Bank of America. I don't know what to do with this, but it's interesting to me.
It's I'm not going to get into a macro or microeconomic
Don't do that.
hole, but going back to the concept of inflation, right? Inflation doesn't necessarily have to be high for one thing and high for another thing just because they're both commodities at the same time. Would you agree with that? Inflation of a commodity, or the increase in the value of a commodity, has to do more with that individual thing, or it's more maybe based on supply, like real true supply. And so
No,
I
I'd agree
think
with
you're
that. I mean, you
seeing
could have a freeze. I mean,
right.
much less production of oranges is done in Florida these days, but you could have had a freeze in Florida and orange juice prices skyrocket. But you might have a glut of oil because of overproduction, and you could, I mean, I think that's the point. You
Yes.
might,
Okay.
yeah.
Okay. So if we can sort of go off of that, then I think that you can maybe chalk this up to a combination of two things. We keep coming back to that. Hey, central banks have bought gold. I don't know if they're still buying gold. I haven't looked at the chart. It's been a couple of weeks since we pulled that chart up, right? But central banks have bid gold over the past year or two, at least it looks like. And so you've got that, okay? And I doubt they're buying it up just to sell it immediately back. Who knows? But oil, I think this is a very pro oil administration, and the world seems to all not be freaking out just yet over oil. Um, and so it seems, yeah, I mean, it seems logical to me. It's also just, it astounds me that this is the first time that's ever happened. It's pretty incredible when you think about it.
When does this go back to? It doesn't, that, all right, I'm going to call it chart crime here because they didn't tell us how many
Yeah,
years ago this was.
I see 1973 as the lowest identified one, and obviously one of the outliers to the upper right, but yeah.
Well, I think those periods too were during a period of massive and very, very high inflation, and gold tends, historically was an inflation hedge. Gold wasn't necessarily a great inflation hedge in 22. It was really 23, 24, and then this year that gold followed through. But no, I'll buy that. I mean, and even the inflation that we had, I mean, it wasn't really it was a goods inflation, but we also produce a lot more now than we did back then. I mean, I think U.S. is pretty self-sustained with, if it needed to be, with oil production, and there are more techniques now than ever to extract oil from places that they couldn't. But I like these
Right.
anomalies because this is one of those things where if you looked at this, you would say that, if so, here's the thing: if you said that, oh yeah, gold is going to go on an unbelievable run. Imagine you knew this was going to happen. You would say, I'll also buy oil because I know oil is going to go up, and here it didn't. That's the main point.
Absolutely. And again though, I think this is also a reflection of, like what you just said, with technology, with the administration that we have in the US right now, and sort of what we've been doing. I think we've been pretty high on our output as a country as well over the past few years. And so, um, absolutely, the culmination of it is it's history, right? Doesn't often necessarily repeat 100%, but it often rhymes. And so here we are again, sort of in an outlier like the 70s. And some people keep yelling and screaming, hey, it's the 70s, it's the 70s, stagflation, this and that. Well, I mean, we're seeing some outliers pop up, so it's definitely something is going on. But
It is something. I'll tell
yeah,
you what else is something, Shane. Flows into metals funds. Mike Sicardi on Twitter had, according to Goldman Sachs, money is pouring into metals funds. No surprise here. People chasing what's been working. And look, if you went into gold after 23, you got another 2 years. Like sometimes it works. Sometimes you buy the stuff that's going up because it's going to continue to go up. I don't know what gold's going to do, but certainly there's more buyers than sellers. It's going to go higher. But isn't it uncanny though? Like, and we saw that. I mean, emerging markets back in the '90s, they were the big thing, and then they had the big flows, and but no surprise. And you know that there's probably some money managers or advisors are like getting questions, why aren't I in gold? Or they're getting calls saying, hey, should we buy gold? And maybe they put it in the portfolio, and then who knows, once it's already made this run. Like, I don't know. I think there's a case that gold goes higher. I think there's a case that gold goes lower, and I'll let you know when I know. But uncanny, right, Shane? Like the stuff that's gone up the most gets the most flows. It's just how it works.
absolutely. There's a whole psychology behind investing that so many people forget. Like, all of this is the outcome of humans making decisions, human behavior. And and when you think about it from that aspect, absolutely. And another thing is, sometimes I was always taught, stocks, then bonds, then gold, in terms of like safety, flight to quality, like was how, like, my grandpa told me what it was, right? And it's not. Sometimes people just do things because it's what everybody else is doing, right? Doesn't necessarily mean gold is actually worth what it is now in 10 years, but also at the same time, you can't necessarily deny, the run it's had. And like you said, I'm not going to try to predict when this thing's going to stop.
Thinking about predictions, a lot of people have been bearish the US dollar. The dollar was going down. People made a big deal about it. They said US, what do we call it? Well, with the US and tariffs, the US has lost its exceptionalism. That's a different discussion. But I am interested in the dollar. And the reason why I'm interested in the dollar, because I feel like it got to be a crowded trade, meaning people shorting the dollar. Well, the dollar has been going higher. So if you look at the dollar index, or what's the ETF, Shane, or an ETN? Is it UUP? Is that the up dollar? Maybe there's one of those that track the dollar.
Yeah, the Investco. Yeah.
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 So you look at something like that if you just want to like look at a chart, you don't know how to get the dollar index, and it's very Eurocentric, meaning that is highly weighted against European currencies, a little bit of Japanese yen. There is, but mostly Europe. There's also a trade weighted US dollar index, which is based upon the trading partners of the US. But you look at this, and I mean, the dollar did not catch a bid today, and it didn't continue. You would have thought maybe a little bit of flight to safety. We saw bonds catch a bid today. Bonds did okay. If you look at the
TLT had a great day.
yeah, you look at
TLT
TLT.
had a great day, up 1.61%, up
Yep.
$1.44, closed at 90.62. You know, that's one to watch. I've heard plenty of people for the past 3 to 5 years now arguing that, stuff like TLT should be catching bid, and it's in an interesting spot, but this is normal behavior in terms of stocks down, right? I think, or at least more traditional behavior, when you see the market sliding as much as it did today, and then you hear TLT, 20-year Treasury bond ETFs, up 1.6%. That does seem like normal behavior, taking a little bit off of equities, putting them into bonds.
Well, all right. So gold was up today. The dollar was down, but let's say treasuries and gold were up. That's like 101, the playbook, the classic playbook. Like equities are down. What do you hedge with? That stuff worked today, but it hasn't been working. So the fact that it worked today, I think, is significant. I go back to, was it Thursday or Wednesday that both equities, so the S&P and gold, were both down the same day? I didn't do the research. If I should have done that, but I was trying to remember when the last time those two assets were down at the same time. And look, it didn't know the announcement was going to come today, but I just think it's one of those things. When that happened, it kind of told you that maybe there was something brewing beneath the surface.
So I definitely something. I would agree with that. I'll buy that.
I mean, gold was up today. Gold did what people thought it would do today, but
Listen, I'm gonna call out. I said it earlier this week. You sent that lovely chart. The Japanese 10-year. I'm watching it. It's at 1.693. The last time we were at this level was 2007. I'm not.
oh,
That's
don't
not
do
me.
it. Don't do it.
That's not me. No, I'm not making any statement or claim at all, because we could reject here. It could retrace back down. All I'm saying is, it's something we haven't seen since how old was I in 2000? I was 10 years old. So that's pretty historic too. And again, it's not a call on anything, but it's just, I think we're going to continue to see more and more anomalies, or things that are maybe outside of what's been normal. And at the same time, that doesn't necessarily mean bad for equity markets, or any or good, anything. I don't know.
I got to be honest though, with the Japanese government policy and their central bank, it's like they tried negative rates for years and years and years, and they never really got the growth. It's the same thing here. We had zero rates for years, and
Yeah.
we never saw inflation. Like I was saying back then, I was saying for a while, like if I was Japan, I would just let it like let yields go, let them go, because and I mean there's all sorts of dynamics there. But no, you're right. And when you see a repositioning like that, sometimes these big shifts, if there's big institutional pockets of money and it causes losses or gains one way or another, it
Plumbing.
has to get reset. So,
Plumbing.
but
Yep.
that's my point about the dollar, Shane, is that not everyone, but the common denominator here is everyone's like, oh, you got to be short the dollar. Like all this tariff stuff is the market's going to crash, the dollar's going to crash, the dollar will never recover. The dollar's actually higher than it was. If I go back on a chart, it was higher than it was, in early 2010s, I think. So you got to put this in perspective. But when you have these big institutional positioning, like a short dollar trade, if you get any sort of reversal, A lot of times they gotta close that. The other thing I wanted to mention, Shane, is the 10-year Treasury yield. Did I see this right? 4.05. So I think it made another low that we haven't seen. Is this right? Since is this March? I think it's March that we haven't seen that. So anybody who's doing mortgages, a lower 10-year yield means it's constructive for mortgage rates. So, but yeah, the 10-year has been going down. It's been trending down since, what is that, July? The most recent high?
It's we've been talking about this, haven't we? Right?
I
About
think
the
so,
idea
yeah.
about the 10 and the 20 might catch a bid at some point. And it's not that it's bad or unhealthy, but it's just a distribution of, look, let's be real, it might not happen tomorrow, but over time, short-term rates continue to come back down. People need a little bit better yield than what short-term rates have to offer. They're probably going to have to go further out to get it. And that's just sort of how this works as the yield curve straightens out. But yeah, this is a pretty critical level.
Yeah, I mean, if you draw a line at the bottom, that 4% is kind of interesting. It dipped below there in April and then came back. So let's see. I mean, look, the trend is the trend until it ends. So would it be surprising to me to see yields break down further? No. And in fact, this is another area where I think a lot of people were short bonds, thinking that yields were going to skyrocket, and that hasn't been the case.
Correct. I mean, we were at 3.25 back in 2023. It looks like.
Well, we were above 4.75 in, was that January?
We
I
were at
think.
3.25 and 5 in the same year in 2023. So, and here's what happened. It ran up, the 10-year smacked 5 2 weeks in a row. It tested it, and we've never been there since.
Oh, we
And
almost got there. Early 2025, it was 4.75. It was, what did it actually crest? It went
is
to,
that
oh
right at
yeah,
the start of the year, right? Yeah.
4.80. Yeah,
Yeah, 4.8. Yep.
4.8%. Yeah.
Yep.
So that was January 13th.
No, I was expecting them to go higher as well. I didn't trade it myself, and that's again because I don't do interest rate trading. That's not my game, right? But I was expecting them to go higher as well. So I'm glad you called this out. It's definitely something to keep an eye on. But again, what in your and you've done this a lot longer than I have. With them cutting short-term rates, is that something that you would expect to have some effect on the 10-year, no effect on the 10-year? To me, it just generally thinking about it, I would think that they might come down a little bit, not necessarily shoot up, when you really sit down and think about it.
Well, it really depends because a lot of times when they're cutting rates, there's some problem in the markets, and the markets, the stock market too is having some issues. We cut, the fact that they cut. So I go back to 1994 when they raised and then they lowered into 1995. Yields went up at that point, but we had growth, and growth is a big determinant of bond yields. In fact, if you look at the nominal GDP growth and you compare it to the yield on the 10-year Treasury, so nominal is not inflation adjusted, there's some similarities there and some correlation. So this time, what happens? Well, they lower rates, but we are near all-time highs, which isn't unprecedented. That's happened a bunch of times. The Fed did that. So the fact that rates are coming down is that saying that the growth isn't going to be as high as we thought, or is it just there's it's kind of prefacing that rates are actually going to go much lower? I don't know, but that's my experience. But it really depends. Like if you look at, so they go and they cut 2000, was it 2008? They go and cut. The 10-year yield plummeted, but of course, because we were in the financial crisis, and they knew basically you're going to jack down rates even more. So I don't know. I mean, mortgage rates, I think there's more spread compression that's possible there between the 10-year and the 30-year rate. The other thing to look at here is we have not had a lot of news because of the government shutdown. So did I see this, that we're not getting CPI for September until the end of October? Did I see that right? I could be wrong on that.
I believe so. I think someone is doing it for us, basically.
Well, I think no news is good news, or no news is bad news because you don't know. And I thought no news was fine until today. Although today, really, I think we were on our trading chat and you said, what just happened? And then we saw what the statement about the tariffs. But yeah, I don't know. It's
so so that news came out at 10:51 Central Time. BLS will publish, or that's when I saw it at least. BLS will publish the September 2025 Consumer Price Index on Friday, October 24th. So kick the can down the road a little bit there, 2 weeks from today. So what you probably have going on is some hedging around that potentially, right? That's typically been something where, for those that don't know, that's sort of a concept of like an event trade, right? Something's happening, an announcement, could even be earnings, whatever it might be. But some people feel a need to hedge around those things as they, depending on how things go, could potentially move the market or underlying significantly. And so, yeah, we that news came out, so that justifies potentially people going out 2 weeks and buying puts, right? And that is obviously putting pressure on the market maker's book with negative or positive deltas if they're selling those. You've also got, when a move happens like it did today, intraday, as quickly as it did, we either see one of two things. You see like the V-shaped recovery, like the selling pressure just disappears after about an hour and then it recovers sometimes sooner. After that news came out about the tariffs, we essentially fell 67.51 down to 66.25 in the matter of 30 minutes, roughly.
Yeah, no, it was quick.
Yeah,
it was quick,
no,
but
huge pullback, and then sort of just meandered lower the rest of the day, and then into the close really started to slide again. I think the market expected, with him having this announcement after the close of futures. It was 5:00 Eastern, right? He made this announcement. I think the market, just everybody got concerned. It doesn't necessarily mean selling off because people are bearish, but if you see accelerated put buying, and that's the majority of what's being done that day, you would expect the market to pull back, right?
Well, we will get some news next week. We're starting earnings season in earnest. Tuesday before the open, BlackRock, Goldman Sachs, Citi, Wells Fargo. Let's see who else is on here. Wednesday, ASML, that's a chip maker, Morgan Stanley, Bank of America, Citizens Bank. And then Thursday, I always look for this one, TSMC, because they make all the chips that NVIDIA and everybody else is doing. That's before the open. I think that will be an interesting one. And they're early. And of course, NVIDIA is very late in the cycle, but they come out before everybody else. So this week you have the banks. American Express is on Friday. Let's see, State Street, financial company, ETF company, of course. Schwab comes out, Travelers. So Shane, we're going to start to get a picture of how the companies did. If the trend continues that analysts have underestimated and they outperform the analyst and they guide, I think it's we could see a reversal in the market higher. The question is though, now with this news about the China tariffs, is Chase on here too? Chase should be somewhere. JP Morgan Chase, but there's a Jamin yeah, they are. I said those before
The
the open
14th.
Tuesday.
Yep,
But does Jamie Dimon come out and say hell is freezing over? Didn't he say that once? He
I
said
believe so.
something to the effect.
That stuff. He says a lot of stuff, and
But,
I that's
but
not
there's
a
a vacuum now of an information vacuum, and we start to get earnings. And I always say, Shane, that earnings are the most important thing. Like over the long term, earnings growth mirrors the stock market growth over the long term. And they might diverge a little bit, but if you look at them on top of each other on a chart, it's pretty similar. So we're going to get some news, Shane.
absolutely, and it's really just it's a culmination, right, of all this stuff sort of going on all at once, and realistically, with all this going on coming up, tariffs, earnings, it doesn't surprise me again to see a little bit of a pullback, probably some hedging going on. I mean, it's not nearly as cheap now as it was probably a week ago. I think we talked about that actually at one point a week or so ago about how cheap, you know, some of the hedges that were out there being displayed, on the options chain and in the market were. And so it just goes to show you that, timing a big fast pullback, it
Well,
it's really hard, right?
well,
You
this
don't
is why we say always be hedged. I mean, let's
right.
talk about that a little bit very briefly. We won't get into the weeds on this, but we have a strategy that that hedges down, buys the market, and then hedges the downside. And we have a couple of different variations. All of us on the trading chat we're saying it's really cheap to hedge, which isn't surprising because when markets are going up and markets at all time highs, a lot of people don't think, oh, I need to hedge. They think about hedging at the lows in April. Oh, now might be a good time to either sell at the low or put on hedges when they're most expensive. But to give you an example, we were seeing hedges that were fairly inexpensive where you could hedge, start the protection at about 4% down and the protection stays on till about 25% down. And the annualized cost of hedging was fairly inexpensive. Maybe 3% annualized cost of hedging, like the cost for the options, maybe 2.9. Just as an example, and those change, and we always calculate those. But we even said like nobody wants to be hedged right now, and those who would want to be hedged are like on the sidelines, and I think that's the interesting dynamic. So look, I mean, I always go back to, I know today was a big move. I mean, was it though? Warren Pies, we started out the program. Warren Pies said we've gone a long time without a 3% pullback, and we didn't end the day down 3% in the S&P, but it was a big down day. But I always go back to Ralph Acampora, a famous technician, and I interviewed him a couple times back when I used to host a show at Ameritrade. And he always said this. He said, "Look, I mean, does news make price, or does price make news?" And his point was, when there's a move in the market, people have to explain why it happened. It doesn't necessarily mean that it caused it. It doesn't necessarily mean it's going to be long term. But that was his point. And I know you guys make fun of me for saying there's more sellers than buyers when the market's down. There's more buyers than sellers. That's who I first heard say that. And he was talking about, sometimes people want a reason. He's like, look, more sellers than buyers. And in the end, that sort of matters. So, I mean,
Yeah, and the
we,
big halfway between point is the whole figuring out what drives buying and selling, what
but if you're
causes.
a long term investor, do you really care?
You absolutely not. If you love to look at the microstructure and trade the day to day, then absolutely you should be looking at things of that nature, possibly. But yeah, if you're a long term investor, you know, like we say, right? Buy and hedge. Just it's why you hedge, because you're not going to necessarily be able to time these major pullbacks when they happen. You'd rather have something on to protect all those gains that you got to the upside. I shouldn't say all those, but you get where I'm going, right? I'm preaching to the choir, but realistically, again, nobody wants to buy hedges until they're expensive, like you said earlier, and that's why you do it beforehand if you can.
So I peeked at the Fed funds futures just to see what the probability was. And I mean, what, 2 cuts by the end of the year? Do you think they're still committed?
At this point, probably, yeah.
You think so?
It could
Okay.
be more. Yeah, I do want to call out too, just because this is a pretty big move um, we're seeing right now. Uh, Bitcoin down 5.5% today, back below 120,000 to 115. Ethereum down. Right.
Well, we should talk about MicroStrategies too. I think
Yeah.
the bloom has come off that rose a little bit.
Where's it trading? Let's see.
I mean, it's 304.79. The all time high was what, 434, I think.
543. I
Five
think
43. Oh, okay. Yeah, I'm looking at the
543.
wrong chart.
MSTR. You're good. Yeah, that was like a 1 day thing. Yeah. No, this is it's an interesting spot they're sitting in. This is a pretty big level they've been sort of flirting with the past couple weeks. But
I got
prior,
to be honest though. I don't think this is about technical analysis. I think it's about the value of the Bitcoin and the premium we're paying for Bitcoin, and whether people decide that, why would I buy this when I could just buy Bitcoin? And I know
yeah,
that
look at where Bitcoin's trading relative to its previous. Bitcoin hit its all time high this same week, and
that's right.
MicroStrategy is trading well off of its all time high from months ago. So, absolutely,
We should talk about this in a future show. We're
we
not going to
should.
do it justice, but it's just
I-
the idea of borrowing money to buy Bitcoin and somebody buying this. I forget what the premium was. In other words, it's you're paying, was it 1.3 times Bitcoin's price based upon their market cap? I think it was.
yeah,
I'd have to look at it.
yeah,
And I know they say, well, if our stock goes down, we'll buy it back. Look, I don't know what's going to happen with this company, but I think Jim Chanos, he's written some stuff. He's probably taking the bear case where he says he's buying. I think he said he's buying Bitcoin, but he's shorting MicroStrategies, or Strategy, I guess it's called now. So I don't know, but no, you're right. Like some of the stuff that's been working, it stopped working recently.
absolutely. And I mean, but that's how it's always been. That's the stuff comes and goes, and you know that isn't to say that this isn't going to catch a bid next week and go right back up. Who knows, right? But at the end of the day, talk about investor psychology. Stuff goes into style, stuff goes out of style. Um, I don't know. This looks like it's at a very crucial point. And again, like we said, 543 all time high back in last fall. And now you're at 304. You're down 240 off your all time high, about 50% almost.
But you look at IBIT. IBIT's
Meanwhile, I
the
bid
iShares.
all
Yeah.
time high this week. So it's kind of like, yeah, I wonder if the people in the MSTR crowd are looking around, starting to.
Saying maybe this won't work. Hey, look, maybe it will,
We'll
maybe it
see.
won't. But it's no, I think it's a good point. The
And here's
iShares Bitcoin Trust, which is IBIT, IBIT. It's just one of the ETFs that are out there. I think it's got quite a big amount of assets in it now. Yeah, all time high this week. While MicroStrategies is, I mean, it's not 50% of retracement, but what is it? 40% of its all time high, something like that.
yeah,
Yeah.
between 40 and 50, it looks like probably around 45 if I had to.
Yeah. So
Yeah.
That is, I'll have to look at the market cap on strategy against this Bitcoin. All right, well, let's do this another time. Shane, let's get to recommendations.
Cool.
And do you recommend the so the CBOE is the Chicago Board of Options Exchange? Do you recommend for listeners if they're ever have the opportunity to attend that conference, the Quant conference?
If you love high level math or you want to listen to some of the most brilliant minds and volatility academia, absolutely. That's for some people. Other people, maybe not their cup of tea. Completely respect either way. But the event overall was incredible. I mean, just start to finish, all the speakers were phenomenal. SIBO was fantastic in hosting, and so
And you
I
rang the
hope
bell on Friday, right?
we did get to ring the bell Friday, and I mean, go down, see the floor, see a little bit of the closing trading, and there's a little bit of flow that came through that we got to see. So got to see some shouting and yelling. Um, so it was awesome, and I hope to get the opportunity to attend another one in the future at some point. But you know, overall, if I had to make any recommendation, we're sitting in October. Um, I'm gonna go with the classic Ghostbusters. My son demanded to watch it the other day. I was so proud. Uh, it's a classic. I
What year was that movie? I saw it in the movie theater, but I'm trying to think what year.
80, I think was it
Is it 83?
83 or 4?
All right, now we're going to have to look this up. Ghostbusters
84. 84.
84. Yeah, I saw that in the theater. I remember seeing that.
I mean, incredible cast, great movie.
So what you lose, because you're younger than me, you lose the perspective that movie was huge. Like they had the tie-ins, maybe it was a fast food place. They had the Ghostbusters cups. They had the song, the Ghostbusters song was like the number one MTV video. That was a
That's how
huge, huge
big.
hit.
Yeah. I mean,
Yeah.
yeah, no, and I mean, look, my son can recognize it at his age, so it's clearly like it stand the test of time. It's a fantastic movie.
All right. I watched another episode of Chad Powers, but I got to be honest. I hate the fact that Hulu doesn't release all the episodes at once. Like, just let me watch all the shows. There's two more left in the series. I don't like this. I like to just be able to watch it through. I can't give my evaluation yet. So far, and by the way, Shane, I even said to myself, I'm going to wait till all the episodes are out so I can just watch it through. I should have done that. So I got to wait, like, I don't know, 2 more weeks to see.
Yeah, once you start that, you can't stop it. You just have to watch it in time. But it's different. It's not the same as cable. I'm with you. It was different when The Sopranos was running, and again, it was huge. Everybody was probably talking about Sopranos. Did you see it this week? When you got to work, so you had to keep up with it.
I remember with Sopranos, VHS taping an episode, and then you were worried would it actually work. Like, people understand that. Your age, probably, or younger.
Absolutely not. We had TiVo by the time.
Yeah, you had TiVo. Like,
we
that
had
just
TiVo by the time we
works.
cared. Yeah.
Or now you have on demand. Like, you can go tonight and watch every episode of The Sopranos if you wanted. I mean, you'd be up you'd be watching it till Tuesday. But yeah, it's so anyway. So Chad Powers, Mike and I talked last week about Black Rabbit. I thought that was really, really good. So if people haven't seen that yet, they should definitely watch that. Have you seen that?
I've not, and I've needed something. We've been sort of sidelined since we moved, and so we've been waiting to find a show, and I'm gonna have to look that up. You said Black Rabbit.
Black Rabbit on Netflix. It's Jason Bateman and it's the British guy. Here, I got to look it up now. Black Rabbit cast. Jude Law, and Jude Law does kind of an American New York accent. I don't know how they do that. Like, what's
range? Yeah, I don't know how Christian Bale does his American accent.
Well, he's just a phenomenal actor.
One of the greatest.
So Mayor of Easttown, Mare, if you haven't seen that one, Kate Winslet. Winslet's British. She played a cop in like rural Pennsylvania with a very specific, like a lower Delaware specific accent, and she pulled it off. Like it's incredible. Have you seen that? Like that's all right. That's another recommendation for me. Mayor of Easttown, Mare of Easttown. It's on HBO, and that was really really good. So there's two things you can watch.
I got homework. Perfect.
I would watch Mayor of Easttown first. Actually, I think that's better than Black Rabbit. But I just saw Black Rabbit, so there you go.
Good
All
enough.
right, I think we're good this week. Let's see what happens if there's any follow through on Monday. Sometimes there is, sometimes there's not. There could always be news. And look, we're going to get into earnings, and we're going to see what companies say. We're going to see if they beat earnings expectations. I mean, earnings growth is still penciled in by the analysts. So until proven otherwise, earnings are growing. But that's why we hedge, because you never know what's going to happen. All right, Shane. Good luck to the Cubs if they haven't played already. If not, don't tell any.
Right. Yep.
By the time people, listen to this, I think that game will be over. But anyway. All right, everyone. We'll see you next week. Thanks.